Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Moderna Inc., ticker symbol MRNA. Moderna was a pandemic darling and they were one of the heroes of the pandemic, being one of the first companies to come to market with a COVID-19 vaccine. However, over the last year, their stock price is down 72% from their huge pandemic highs. Currently, they're trading at a stock price of $123.64 per share. Over the past 3 years, even with this huge decline, the company is still up at a rate of 91% compounded annually, which is just insane. This shows you the potential for booms in this biotech space. Moderna is down over $300 from their 52-week high in early September of 2021. And since they went public a little under 4 years ago, the company's stock price is compounding at a rate of nearly 66% annually. Again, just crazy numbers here. From their IPO price, the business is up about 6 times, and at their high, they were up nearly 22 times in just 4 years. So Moderna is currently trading about $8 over their 52-week low. There's some short interest around the business with a little under 4% of their shares outstanding currently sold short. And Moderna is a large company now due to their pandemic success. They have a market cap of over $48 billion. Moderna is a commercial stage biotech company that was founded in 2010 and had its IPO in December of 2018. The firm's mRNA technology was rapidly validated with its COVID-19 vaccine, which was authorized in the United States in December of 2020. Moderna had 44 mRNA development programs as of early 2022, with 25 of these in clinical trials. Programs spanned a wide range of therapeutic areas, including infectious diseases, oncology, cardiovascular disease, and rare genetic diseases. Moderna Inc. was founded in 2010 and is headquartered in Cambridge, Massachusetts. For our fundamental analysis, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Moderna Inc. based off of their business fundamentals. So this analysis is a work in progress and it's an opportunity to learn in public, so it's going to continue to improve and get better over time. So with that said, let's get right into our analysis today. So starting off here with metric number 1, we want their average return on capital over the last 5 years to be above 14%. So the average publicly listed business earns about a 7% return on capital, and over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. In Moderna's return on capital, we get to see the highly speculative nature of early stage biotech companies. They had pretty terrible returns on capital that were all negative leading into 2020. Since then, since their COVID-19 vaccine was approved, they've had just outstanding returns on capital. So last year, they had 88% returns on capital. And in the last 12 months, they're producing 83% returns on capital. Even with their success, averaged out, they're only earning about a 6.8% return on capital, despite those really high numbers currently. So unfortunately, this is going to be an X, as it's only about average returns on capital averaged out. However, take this with a grain of salt. This really isn't going to mean a ton here for Moderna, especially if they're able to keep up the high returns on capital that they've been able to produce since getting their vaccination approved. Metric number 2, here we're taking a high-level overview of the cash coming into the business. We're looking for their revenues, net incomes, and free cash flows to have grown in the last 5 years. This metric is all or nothing in nature, meaning that either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. No surprise here, given Moderna's recent success, that they have hugely grown their revenues, net incomes, and free cash flows, really just from 2020 to 2021 alone. 2020 was the first year that the company produced positive free cash flows, and since then it looks like they've more or less been off to the races. While the cash coming into the business right now is going to be heavily dependent on their COVID-19 vaccination, it looks like the business has been off to the races since getting that approved. So this is a massive check here on metric number 2. Metric number 3, building off of the previous metric here, we're looking for earnings per share growth in the last 5 years. While we saw a huge earnings growth in that previous metric, here, we're still seeing a very big earnings per share growth, but it's not quite as fast as what they've grown their earnings at. This is because since their IPO, they have diluted existing shareholders by about 668%. So that's not necessarily surprising, especially with an early stage biotech company that's not going to have cash flow coming in. The whole point of an IPO is to sell shares of the business to raise money. So it looks like that's what Moderna has been doing since then. However, the business has still been diluting shareholders over the past 2 years, even with their recent successes. And so we don't like to see that, because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. So when a business issues new shares and dilutes existing shareholders, they're decreasing your ownership percentage of the business, which is ultimately going to decrease the percentage of the business's profits that you're going to be entitled to. Even with their shareholder dilution, their earnings per share are up massively here. So this is going to be another check here on metric number 3. Metric number 4 is going to be pretty similar to the last metric. Here we're looking for free cash flow per share growth over the last 5 years. Different from their earnings, they've had positive free cash flows over the last 2 years, and they still have positive cash flows today. This is another check here on metric number 4, and so far we are 3 for 4 on Moderna. Metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that they produced over the last 5 years. So at the end of last year, Moderna had about $16.5 billion in cash left over after paying off their liabilities. Currently, they have about $17 billion in cash, and in the past 5 years, they've generated about $14 billion of free cash flow. So this is going to be a massive check here. Moderna is sitting on a ton of cash, and their biotech business, which was formerly taking in cash flow, is now gushing off quite a bit of cash flow. This is a great sign to see here on metric number 5. The business has a very solid balance sheet. Finally, the big metric of them all, metric number 6, we want their average free cash flow to enterprise value yield to be above 5%. If this is the case, this will give us a slight risk premium to the risk-free rate of the 10-year treasury and potentially give us a reason to be interested in the business. So we're using enterprise value here instead of their market cap, because it is going to be more reflective of economic reality for this business, as it takes into account both their market cap and their net debt position. So currently, Moderna has a total enterprise value of about $31.2 billion. And if we average out their cash flow over the past 5 years, they're earning about $2.8 billion of free cash flow in a given year. So when we divide their $2.8 billion of average free cash flows by their $31.2 billion total enterprise value, we get an average free cash flow to enterprise value yield of a little under 9%. So this is a check here. This means that Moderna is potentially offering a pretty sizable risk premium versus the risk-free rate based on their abilities to produce free cash flows. Also to note, over the last 12 months, Moderna has produced about $9.3 billion of free cash flow. And if we use a similar calculation, dividing their $9.3 billion of the last 12 months of free cash flow by their enterprise value, that brings us to a current free cash flow to enterprise value yield of nearly 30%. There are not many businesses out there right now trading nearly at this valuation. If Moderna is able to sustain their cash flows for really any capacity more than the 3 years that the market is currently pricing it in here, then it looks like Moderna could potentially be massively undervalued. However, they are a biotech company, so there's a lot of speculation here. Their drugs that are in their pipeline are always going to consume free cash flow until they get approval. And Moderna is coming off of this emergency vaccination status for their COVID-19 vaccine. They were definitely the recipients of some first mover advantage. And so if you're interested in the business, you absolutely want to understand what's happening with their vaccine sales to be able to have an educated understanding of where their free cash flows could potentially be in the future. Just because they have such high free cash flow yields here does not mean that you're going to run out and buy this business right away. Instead, this signals, based off of this holistic and beginning analysis, that it's probably worth your time to do more research and learn more about Moderna here. Keep in mind, this type of analysis is not financial advice. It is not a buy or sell recommendation of any security. And before considering any potential investment, please consult with the properly licensed and registered financial and legal professionals. So in summary, Moderna checks the box on 5 out of 6 of our metrics. As an early stage biotech company, Moderna has hit it big with their emergency COVID-19 vaccine based off of their mRNA technology. The company has seen massive growth in their returns on capital. They've also experienced massive revenue, earnings, and free cash flow growth. While they have issued a lot of shares, their extreme growth has made up for that, and they're still up on their per share metrics. Then finally, the company is sitting on $17 billion of cash currently, and both their current free cash flow and their average free cash flow yields relative to their enterprise value signal that the company is potentially favorably attractive right now, likely giving a strong risk premium to the risk-free rate. However, as mentioned, their cash flows are going to heavily depend on how they're able to sell their vaccines going forward. So if you're interested in learning more about the company, I highly recommend diving into their 10Ks. You can get a sense of the history of the business, as well as you can understand the risks and potential opportunities that the business is facing. You'll also get a perspective of how management is approaching capital allocation and better understand the environment the company is operating in. Once you're done reading through those 10Ks, I would also recommend reading through the company's earnings call transcripts to get a more quarter-by-quarter perspective of the business going forward. As a value investor, you're ultimately trying to understand a business as if you owned 100% of it, and you have some insight into the underlying essence of the business, truly knowing all of its ins and outs and what matters and what doesn't matter for the company. Again, this type of analysis is not financial advice, and it is not a buy or sell recommendation of any security. So with that said, that's it for today's fundamental stock analysis of Moderna Inc., ticker symbol MRNA. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Moderna with me, and have a great day.